With the S&P 500 up over 6.5% in the last month alone, you'd be forgiven for thinking that the economic outlook was far more positive than it perhaps is. With recession looming, rising interest rates, rampant inflation, and a UK political system that seems in complete disarray, that couldn't be further from the truth. Personally, I think this rally will be relatively short-lived, and to the end of the year, October, November sort of time, I think we're going to see a fairly hefty pullback. It has done wonders for my portfolio. It is that day then when we hop in and have a look at my Vanguard portfolio in my regular monthly updates. Now, because things are changing so rapidly, it is probably worth to mention that this is being filmed on August the 22nd, so Monday, August the 22nd. So by the time this comes out on Saturday, who knows what could have happened. Of course, if you do like videos like this, please don't forget to like the video and comment down below and let me know exactly how your portfolio is getting on at the moment. Have you seen a nice bit of growth with the recovery you've seen of late, or have you invested in more speculative companies, which means that you haven't seen that recovery as most of the index funds have? My total ISA is currently valued at £12,443.46. That's in a total value increase of almost £1,000 in over the last month alone. Now, I have invested around £300 in that time, but around £700 of that has come from capital return. Furthermore, this means that my portfolio has actually increased in value by £2,000 since my update back in June. Now, as I've said, some of this has come from capital investment, but a lot of this has come from capital growth throughout that period of time because of the market rally that we've seen over the last few weeks. My personal rate of return currently sits at 40.8%, and again that's up from 27.2% in the last update. The S&P 500 is still my largest investment with a total value of £6,116, and that's up around £700 since the July update. You can see that this makes up now almost 50% of my ISA, which is the target allocation for the S&P 500 ETF, with me targeting around 50% towards this fund. I've currently got £32.37 within my portfolio currently as available cash. And this is because I'm expecting to pay some fees, those quarterly fees that Vanguard charge over the next week or so. I've also currently got a pending buy order, and that is into 3 units of the FTSE Developed Europe ex UK fund. So I've made that investment today. I'm looking to buy around 3 units of the fund, and then obviously the rest of the cash that's not used within that purchase will be stored as available cash. So I'm expecting to have around £10 left over after that's been processed. As always then, we'll have a look at the personal rate of return over time, and that's shown on this graph here that you can see, which Vanguard break things down nice and simply. So this is since the inception of the portfolio. Again, you can see my total returns are now almost at £2,000. So having invested £10,445, I've almost made £2,000 in the 3 years and 4 months that I've been investing. And again, looking at the graph, we've mentioned previously the kind of trading sideways that we've seen since November. So between November and kind of early June, the portfolio, despite me having invested cash and capital throughout that period of time, we hadn't really seen any progression or any growth within the overall value of the portfolio. That now has changed with the rally that we have seen over the last few weeks, and you can see since June the 16th, when my portfolio is valued at £10,615, that has increased by around £1,800 to where it was sat on the 18th of August. And of course, that doesn't factor in the little bit of movement that we saw towards the end of last week. We know that the market conditions over the last year haven't been great for the stock market. So if you break that down a little bit further and have a look at the 1 year graph, we can see that over the last year, I've actually only invested a little under £3,000, so below kind of the target that I'm aiming for. But I have actually returned to me £600 within that time, and actually my return on investment from the last year, so from the 22nd of August through to the 22nd of August, is actually just over 5.5%. And when you consider the fact that we're in a downturn with potential recession looming, rising interest rates and rampant inflation, that's really not too bad at all. We'll hop through, as we always do, to the calculations. Not much will have changed over the last month because I've not received any dividends and the fees haven't yet come out. So in the September update, I'm sure we'll see a little bit more. But you can see my total unrealized capital growth is currently sat at £1,344 just here. And my total crystallized growth is £341, and that's from selling the life strategy, which I did last month, I believe. My gross interest is now 53p, excellent, so that's growing quite quickly. And dividends, I've received £336.40 in dividends throughout the 3¼ years of investing. The last 2 months have clearly been the best this financial year so far for my portfolio. With April, May and June losing me around £1,000 collectively, the last 2 months have generated me over £1,000 collectively, so it's kind of evened out a little bit as to where we would have been otherwise. So in July, the markets returned to me just under £600, so £595.75, and I also received £93 in income returns. So that's a little bit of interest from cash that I held within my account, but mostly that largest dividend payment that I've received, which is around £92.83, I believe. And that all collectively meant that I returned £688.75 to my overall portfolio, which was really, really good. During the month of August, I've invested £300 so far, and I haven't yet been paid for my job, so I haven't made that normal cash investment that I would do towards the end of every single month. In August so far, the markets have returned to me £521, and I've seen a 20p return in income. So that is essentially just from interest from holding cash in my account. And this is one of the, I guess, slight advantages of raising interest rates. It does mean that any money that's sat in my Vanguard account, I will actually receive a slight bit of income off of that. Let's do the usual breakdown of investments then. The FTSE emerging markets, I've currently got £1,684 invested, currently returning to me £65 with a gross return of just under 8%, with much of that return here coming from the dividend. The developed Asia, Pacific ex-Japan, I've currently got £605 invested with an unrealised return of £67. I'm currently up around 28%, including the £37 dividend as well, which is just under £105. The developed Europe ex-UK, as we've spoken about previously, with everything going on in Europe at the moment, as well as the economic downturn and supply chain issues, we would expect this to be performing fairly poorly at the moment, and we have seen that. I'm currently down 3.5%, and I'm being saved a little bit by the £33 in income, because my unrealised gain or loss from capital growth is just a £57 loss. So all in all, I'm down just under £25. The FTSE Japan, whilst it's red at the moment, I'm pretty much breaking even, with me down £1.29. So not really much to say about that. And then we've got the FTSE 100. I've currently got £1,553 of invested capital within that ETF, which I'm up 39.18% or £321. Now the UK over the next few years, I think, could perform fairly poorly. The government doesn't seem to have reacted very well to inflation, and it hasn't done as much as perhaps the US Fed with regards to trying to slow that down. So the Bank of England has suggested that a recession could last throughout 2023 and 2024. So it could be a bit of a struggle for UK business in the next 2 years, which could mean that returns on the stock market from UK-based investments fall behind the rest of the world. So one of the things I do have to consider is that I am currently overexposed to the UK when considering my 6-fund portfolio allocation goals. So I am going to slow down my investment into the UK and try to support other investments around the different geographical regions. My best performing ETF is of course the S&P 500. I've invested just under £5,000, and that's currently valued at the 6,116 that I mentioned a little earlier. I've received £80 in dividends, and I'm currently up 78.12% or £1,220.72. The other two down here are of course funds that I don't hold anymore, so we won't mention them at all. So what we can do to finish off then is we will flick through to the holdings tab over here and click down to the detailed view where it shows us the exact allocation that we've currently got. The FTSE emerging markets, I'm currently sat on 13.65%. I'm targeting 15, so a little bit below where we want to be. My investment within the FTSE 100, which I've just mentioned, I've currently got 14.14% of an allocation towards that ETF, and I am targeting just 10%. And especially with the potential for the recession and inflation to hit the UK market more substantially than other areas, this is something that I'm looking to combat fairly quickly. The FTSE Developed Asia ex-Japan, I'm targeting 5%, and I'm currently sat on 5.14%, so about the right sort of level. And the FTSE Developed Europe ex UK, I'm targeting 12%, and I'm currently down at 9%. The FTSE Japan ETF, I've got 7.5% of my allocation towards that, and I'm targeting 8%, so again in the right kind of ballpark. And the FTSE 100 now has 49.15% of the weighting of my portfolio. I'm targeting 50%, so again in that kind of right ballpark. From the Insights tab again, you can see the breakdown of where I'm investing, which is very similar to the breakdown that I've just discussed up here. And you can see my top 10 investments are currently Apple, Microsoft, Alphabet, Amazon, AstraZeneca, Shell, cash for some reason, that's because that £100 is currently sat in there for some reason, Tesla, Taiwan Semiconductor Manufacturing, and HSBC Holdings. Now, something that I have realised is that I've got a lot of crossover between my Trading 212 portfolio and the funds or the companies that I held within the funds that I hold on Vanguard. However, I do think most of these companies, with the perhaps exception of Shell, but they are looking into generating green energy now. The rest of the 5 will definitely be here for the long term. Tesla are pushing the EV cars, and the main 4 up here are the largest companies essentially in the world. So I don't see them going anywhere, but it is just something for me to be a little bit more conscious of, I think, moving forwards. At the very bottom then, we can see the last 3 months performance. You can see that I've invested just under £600 in the last 3 months, so I have slowed down my capital investment within that time. But my investments have returned to me just under £1,000, and my rate of return over the last 3 months is 8.75%. So there we have it then. My portfolio is currently valued at £12,448.46, with a return on investment of 40.8%, or a time-weighted return on investment. The market has definitely been looking up, at least for the short term, and I think all of us investors definitely needed that to keep us going and to show us that we're doing the right thing. It can be a little bit demoralizing continually investing cash and seeing your portfolio just stay exactly the same, thereby meaning that you're essentially losing net worth. One of the best things that you can do throughout an economic downturn is just continue doing what you would normally be doing, and that's investing every single month, because a recession might not be as bad for the stock market as you think, as I discuss in this video here. And if you are looking to invest in a simple index fund, there's nothing better than the VWRL, the Vanguard All World ETF, which I break down in a nice little video here.